Hi everyone, it's Don Mahoney with the Millionaire Maker Advisory. I thought this would be an interesting and value-added segment to add to the site because there's so much going on in about different celebrities getting hit and totally crucified by the IRS. I mean, I just recently learned that Abbott and Costello were hammered by the IRS. There's so many different celebrities, and I'm like wondering, these are very wealthy people, business people, celebrities, athletes. Why are they getting nailed by the IRS, and why are they going to jail? Doesn't make sense. You've got money, you can certainly afford adequate, or rather excellent representation. Why are you even going to jail? Rich people just don't go to jail unless you just got every kind of adversity thrown at you. Example, Leona Hemsley. She got hit by taxes. She ultimately did time. Dershowitz, in my opinion, did a lousy defense for her. But I mean, there was just what she went to jail for, which was roughly $359,000 in a tax liability. Say it was $1.5 million or whatever. It was really $359,000. It was a clock that she had charged to the corporation, to Hemsley Hotel Corporation, and she tried to write it off. That's what started her downfall. But she paid over $11.5 million in taxes, and she still had to do 18 months. That's ludicrous. The IRS is our friend. They have architected a system that enables wealthy individuals to take advantage of a multitude of tax cuts and credits to curb their liability. This is why I think that the tax shelter is a good addition to this site, because tax shelters just don't reduce or eliminate tax liability. If you use them adequately, they can also curb legal liabilities. And we'll add some additional material to this particular section so that you can get a good and firm understanding of what I'm talking about. But below, you see a lot of celebrities and stars and athletes. They've gone through the ringer with the IRS. Why do we need tax shelters? Well, aside from reducing our liability, we need to create an entity so that our future earnings and revenue and interest on those future earnings and revenue aren't taxed. We can pay our minimum tax, but we need to ensure that the primary bulk of our revenue and wealth isn't going to be taxed. And the IRS allows us, it affords us to do that through various exceptions and tax credits that they've embedded in the IRC code itself. When I was at Morgan Stanley as the corporate tax director, I saw what you could consider a lot of corporate welfare. The tax breaks that one of the largest investment banks on the planet were getting were just unprecedented. And it made me very curious to understand, if the corporation's getting these kind of tax breaks, let's look into the returns or at least the tax structures of some of the corporation's executives. Being that all of their compensation is public record, I looked into it. And I was just amazed at the level of exceptions to the rule that the IRC code, the IRS code itself, allows for the affluent to take advantage of. The tax credits, the exceptions on what they could write off, and the allowances for those write-offs were incredible. Many years after I left Morgan Stanley, I helped a lot of people that weren't wealthy with tax problems. Some were being audited, most were being audited. Some just didn't take advantage of the write-offs that they could have. And some, the IRS versus, Joe Blow, I helped, get them out of these jams and certainly reduce a lot of the tax liabilities and penalties that were assessed upon them. Because that was my way of giving back. I mean, the wealthy shouldn't be the only ones to enjoy the write-offs and the tax credits that are afforded out there for individuals. But that's not why I'm on here. I'm on here to talk about the wealthy. There's been a lot of emails that I received asking for participation in some of my private equity deals, or do I know of any platform trades? They have 10 million, 20 million, 100 million, half a billion or more to invest. I'm sure these people, along with the returns, are expecting to pay their fair share of taxes. But what does the fair share mean when you make maybe $500 million on an investment return? We're talking about 25% easily. You know, you're pushed into that incredible tax bracket. Most of these trades are traded offshore. You're talking about a 50% hit just bringing the capital back into the U.S. These incredible returns come the possibility of incredible taxes. Well, that's where I come. I can help you structure a legal tax shelter or a series of tax shelters that will curb your tax liability, if not reduce it completely. No one wants to end up like the heir to the Johnson & Johnson pharmaceutical corporation. He's facing a $40 million tax liability right now due to some really bad advice from both his accountant and his attorneys. And some clown that claimed, some third party that claimed he knew what he was doing on how to curb over $110 million worth of taxes. There's a lot of bad advice out there. Most people don't know what they're doing, particularly in attorneys. People make the misconception that an attorney knows everything. Attorneys don't know everything. An attorney's expertise is in litigation, their particular subject matter. An accountant's expertise is in capturing information, data that's put into buckets, financial amounts. They're just putting it in buckets. An accountant is nothing but a bookkeeper. I don't care which way you call it. They're not to be used for strategy. A financial officer, a chief financial officer, someone like that, those are the people that set financial strategy. They have the bigger picture and can see the vision on where you need to move your business in order to reduce your tax liability, take advantage of all the wonderful credits out there, and increase the bottom line on your revenue, on your balance sheet. So accountants, lawyers, do not go to for tax advice. And even tax attorneys, they're there to get you out of the jam with the IRS, not to set strategy either. Who do you call? You call someone like me, or you call a financial consultant. You don't call one of these guys from any of the investment banks, like a wealth advisor or something. No, you call a financial consultant to the wealthy. Those that are wealthy know who I'm talking about. These are people that are charging a minimum of $10,000 an hour, if not more. I know some of them that charge up to $100,000 an hour. But they're charging that amount of money because even if they don't have the specific answers, particularly on how to structure your tax strategy, your tax shelter strategy, they certainly know who does. So look at the material on the site. I hope you find it useful. And if you have any questions about structuring tax shelters or any information that's not covered on the site, feel free to send me an email. Go to the contact section and send me an inquiry, and I'll respond as quickly as possible. All right, take care.